Welcome back to Income Trading 101. Today we're going to take a look at waves, and today is Sunday, June the 13th. Looking at waves, this is versus the US dollar, and I'm looking at it on this is the Binance, Binance US version of it. And like so many of these coins and tokens that had meteoric rises and then just the fall. You know what? May sucked. But I like a few things about this. So let's dive into some analysis and we'll see. I just want to pull back to see about how far as we go as far back to we'll call it October, November 2019. And I'm just gonna pull. I really want to use essentially a year's worth of data to do this analysis. We're going to start off like we always do. The little moving averages. I like simple moving averages. Some people could make the case that using a what do you call it? Exponentially weighted moving average, which puts more emphasis on recent data, is more valid. But for me, it's this gets it done, gets the job done. And like I mentioned before, the MACD indicator that we'll use next does end up taking a weighted perspective. So I do end up getting both analysis or both types of analysis, just not directly. So here we go. We've got 10-day, 20-day, 60-day. And as of right now, it looks like they all are in line, albeit slightly, but they all are in line for bearish markets. The 10 and the 20 are very close right now. They're only 11 cents apart. And it looks like, given the recent data, that one or two more up days and we'll be in a period of convergence as the 10-day moves above the 20, but it's still going to be below this 60-day moving average. Let's take a look at it at the 1 hour level. So when we go down to the 1 hour, it's very tight. I'm gonna have to expand this. Probably have to do this several times over this video. At the 1 hour, no surprises there. It does look significantly more bullish, right? With all three moving averages in line and with several periods of up bars, consecutive green bars for this chart. Let's look at the 30-minute. Same. Although I'm surprised the 20 and the 60 are so close. You can see the 20 period rather, just recently pulled above the 60, and the 10 period is obviously a lot higher at the 30 minutes. So we have bullish on both the uh, 1 hour and the 30-minute, and I'm sure the 15-minute will also be the same. Significantly more bullish. Little spacing between each of the moving averages, which I like to see as well. I get nervous when they're really tight because they can flip. One or two bars can end up being the difference between a positive and a negative outlook for the stock. So, with regards to the moving averages, we have bullish indicators at the 1 hour, the 1 hour, the 30-minute, and the 15-minute. Let's go back to daily data, and we're going to get rid of these moving averages and go ahead and take a look at the MACD just to get a sense of where momentum is for each of these. And it's funny, as you get used to using these indicators, or among others, these aren't the only ones that I use, but these are the ones that I like to use on these videos. You start to have a sense of where things are. I oftentimes can look at a chart and kind of see the indicators before I even go ahead and pull them up, and that just comes with using them and being familiar. So, of course, back in May, you have this significant fall off crossover in the MACD when momentum really shifted bearish. And since June the 5th, so really for um, about the last week and a half, really, we saw a bullish crossover. This has not crossed over the zero line, but I do think if we had like one strong day, that will make all the difference with regards to the way the MACD is showing up at the 1 day level. Let's kick over to the 1 hour. And no surprises here, of course, at the 1 hour. I'm just going to make this chart a little, it's been rather flat, right? Prices going from 13 up to 15. But you have this crossover, bullish crossover that happened yesterday. You also had a bullish crossover that happened on the 8th. And you can see as price flattens out, it really does start to hover closer to the zero line. And so I like to see a little space between these crossovers. So this bullish crossover back on the 8th was much more valid even than this one here, only because this one on yesterday was so close to the zero line. But we did at least go ahead and get a crossover into positive territory. And now we're just sort of oscillating in positive territory, which is what tends to happen when the markets start to trend. And not change direction. So if it's trending, the trend is definitely up at this point, and I would certainly expect things to really expand. Like one or two big bars could see this go significantly more positive. Let's go over to the 30-minute, which I'm sure is going to have even more oscillations. So it gets more granular. The more granular we get, the more oscillations. So in the 11th, you had a little bit of a sell-off across the zero line. Then you had a bullish indicator on the 12th, crossed the zero line, went on higher, crossed again later on the 12th, and then most recently we had a bullish indicator, and it's sort of oscillating hanging right around the zero line right now. Um, I get really leery if you get like the shorter the time frame, the more often this indicator will have you trading. So this is certainly one where I would probably choose a mid-range time frame to use the momentum indicator, the MACD, and then manage it obviously using the larger time frame. And at the 15-minute, I mean, this thing will have you trading all over the place. So we had a sell signal on June the 12th. The other thing too that I point out, if you're going to use the MACD at a really short time frame, like sub an hour, you probably just need to trade the crossovers and not even wait for the full trade confirmation, like have it going above the zero line. The biggest problem there, of course, is that means you're going to trade a lot more often, and the signal is going to give you false negatives. False positives, meaning you'll be selling, buying over and over again. And some of these moves will actually have you scratching or losing money. So um, I'm not big on the momentum indicators at the lower ranges, but um, just for confirmation right now, we did see a nice crossover this morning. Also saw some other crossovers late last night, early this morning that indicated bullish behavior. And we are above the zero line at the 15-minute level as well. So now let's get into my favorite part of these videos, and that's we start looking at the sort of the larger analysis, looking for I want to see support, I want to see resistance, I want to see all sorts of things. And I always start off with the MACD, not the MACD, I'm sorry. I'm going to pull this back out a little bit. I like to start with the Fibonacci levels for this analysis. Um, we don't have to go all the way back to June, but let's just get a good look at, let's just say from here all the way over. We're going to take the full up move over the last year, and you can see um, we have retraced below the 61.8 level, but didn't quite get to the 78.6. But this is still a very key level, and I do find it interesting that this the 61.8% level, which is right around $17.30, has played. It appears to be resistance right here. So that might be what the area that um, at this market really ends up being more drawn to. Um, Very interesting. Very interesting. And it's important to know support and resistance just so you have an idea of where you are. You don't want to be buying resistance sometimes because I don't want to buy resistance just like I don't want to sell support. I don't mind trading the breakouts, but if I'm trading a breakout, I want to know that I'm trading a breakout, not have it happen inadvertently. So this is what I find more interesting. And actually, if I pull this here, let me tailor and pull this over too. It'll let me tailor this a little better. That to me is interesting, this chart here, because especially if I pull it down there, and I don't need to capture all of the information here, but what I like is the fact that on this pullback, you know, on this pullback here that we've had recently, we managed to still stay within an upward trending band. That's pretty amazing to me. It means it tells me that this bottom area may actually have some support. So that would mean that the area that we're in right now could actually be support. Um, and we may be pushing higher. Maybe not to the top of this band. I mean, the band could actually be down there. Either way, I don't mind. Again, when I'm making these channels, I'm trying to get an indication. And if I don't need to capture all of the data. There's a thing called overfitting data. So I don't want to overfit my data, but I do want to try to get a good sense of what's going on. And I like the idea that this is still kind of hanging out in this upward trend. Sure, we had it went parabolic up here, but when you strip that out of the data, this 2 month period out of the data set, we still are going up in this. So that gives me some hope in this. I don't know if any of you own this. Definitely, hey, leave a comment if this is one of the currencies that you look at and watch that you trade or that you hold. If you're hodling whatever, I am not into. I've never bought this one. I've looked at it recently. I may consider adding it to the portfolio just to get a sense, just basically because of where it looks like it's going. Looks like it's going to head higher from here. I'm always happy that I didn't buy up here. That being said, I did buy a few things in early May that have taken the dive, but this looks pretty good. So yeah, leave a comment. Let me know what you guys think about this, if it's made it into your peripheral vision, or you're looking at it squarely or whatever. And definitely, if you have not already, please do subscribe to the channel. Thank you guys so much for watching. And as always, happy trading.